What's going on, people? Back with a bang. This is the Money Management, back here with another video for you guys today. So of course today is Financial Friday, and in this video I'm going to give you guys 4 different common mistakes that new investors make in the market. Now with these mistakes, I say beginners mistakes, but actually I do think a lot of people make these mistakes generally. So whether you're a beginner, whether you're new to the market, no matter who you are, these are definitely 4 different mistakes you'll be looking to avoid as you invest in the market. Now there are 2 specific reasons I'm making this video today. And the first one is because this is the first Friday of the market being open this year, and I know a lot of people like to invest in the stock market, so I thought it'd definitely be nice to raise some awareness. And 2, because I made all 4 of these mistakes at some point in my life, and as you guys know with the channel, I'm trying to spread awareness, help people, so I thought it would be beneficial to talk about these mistakes in this video today. So to start off with, I do want to say a lot of you guys out there have been watching my channel for a while. You guys know I invest in the stock market, and I've only been in the market now 3 years, but even I am not a pro. Even though I'm not an expert, I still make certain mistakes. But again, these 4 mistakes are very common amongst beginners especially. But like I said, many people make these mistakes in general. So if you're watching this video and you're not a beginner, you definitely want to listen in and understand what kind of mistakes people make, just so you can avoid these going into the future. Now, before we dive into that, please just do the usual stuff. Drop that thumbs up, comment, subscribe, and also share these videos. There's a beautiful red button below, and if you hit that, if you've not been around the channel before, you can subscribe to me, get more videos just like this. But now let's talk about those beginner mistakes that investors make in the market. Now, some of you out there might make one of these mistakes, some of you might make a few of these mistakes, but it's definitely very common that people actually mix all these mistakes in together, and it just hurts them, puts them off investing in the market in the future. So, number 1, investing in hype stocks. A lot of people do this. You put some money in the market. You want to invest in stocks which are going to make you rich, put in that money which is going to double, triple your portfolio, bring you back 100% returns, 200% returns within a month. And when people want this to happen, they start to invest in hype stocks. There are many different hype stocks. They come in many different forms. It's not always penny stocks. Sometimes it's growth stocks. Sometimes it's stocks which are going for 50, 60 bucks per share. And the reason I say investing in hype stocks is a mistake is because a lot of the time people have not done their own research. So a beginner mistake is to invest in these kind of hype stocks, not really know what they're investing in. And when they see dips in their portfolio, dips in those hype stocks, they're like, oh wait, have I invested in the right thing? Have I missed the boat? And the reason I mention missing the boat is because of fear of missing out. A lot of people hear about these stocks and they're like, I have to get in now. Kind of like what's happening with Bitcoin recently. People are like, I have to get in now, I buy in. And what often happens is that stock will decline in value, that price will drop, and people will get scared or frustrated or annoyed. All sorts of stuff will happen. It gets to their emotions, it plays with their head, and it's all because they invested in a hype stock. People who make this mistake did not know what they were buying, what they were purchasing, why they were doing it. And one of the main reasons that they invested in the first place, whether they know it or not, is because it was a hype stock. Now, there are definitely many different hype stocks which do well, but what I'm trying to say again is if you do invest in those hype stocks which will decline in value, will drop 50% in a day, it's best not to let that play with your emotions so early on. If you know what you're doing, you've been investing in the market a long time, then it's different. But a very common beginner mistake is investing in hype stocks. And again, that can go for any different kind of stocks. There have been days when I thought Tesla was a hype stock, when I heard people saying all sorts of stuff, and it rose and rose and rose. People saying you have to get it before the stock split. After the stock split, what happened? It drops in value. People saying you have to get this stock because it's not going to be this cheap ever again, blah, blah, blah. People buy it. Next day, next week, it drops in value. People get scared, people sell out. That's how people lose money. So do not be that person who's so intent on investing in a hype stock that you end up hurting your own portfolio. 2, trying to time the market. Now this one I put in there because people have seen my videos recently about trading. If you've not seen any of my videos recently about trading, go search them on my channel. When it comes to making money in the market, your time in the market is a lot better than you timing the market. And I'm sure you guys have heard that before. Now what that means is you spending 1 year, 2 years, 3 years in a stock is a lot better than you trying to say, I'm going to buy the stock when it's 60 bucks and sell it at 100, then buy it again when it dips to 85 on the dot, then sell it again at 115. That's not going to work for you. Timing the market is very, 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 very rare. I don't time the market. The way I make my gains is not by timing the market. It is by spending time in the market. Everyone hears about buy low and sell high. So beginners come along and say, you know what, I'm going to buy the stock low and I'm going to sell it high. Yeah, in principle, that idea is amazing. But in truth, in theory, in practice, it just doesn't work. How can you buy something at the lowest point? How can you sell something at the highest point if you don't know when the lowest point or the highest point is? It just doesn't make sense. Honestly, stop trying to time the market. If you're a beginner, definitely do not try to time the market. On the other hand, if you're somebody who's worked for a company, for X amount of years and you know exactly what the stock price does at certain points of the year, you can definitely buy at a quite low point and sell at a pretty high point, but you cannot time the market and sell at the lowest point and sell at the highest point. But people need to stop trying to time the market because it's ruining their portfolio, it's ruining their trades, and it's affecting people's confidence when it comes to investing. So I'm trying to warn you guys, you need to stop trying to time the market. The stock market is very unpredictable and it does not care about your feelings or what you think. And that kind of rolls me into point number 3. selling on the first dip. People who are new to the market do this all the time, and I've done it before as well. You see a stock that you bought go from $20 per share to $17 per share, and you're like, you know what, I'm selling out all my shares. I'm selling 1,000 of my shares. I bought this stock because I thought it was going to shoot up to $25 within a month. It's now dipped. I'm selling my shares. I'm getting out before it's too late. I don't want to lose my money. Well, you know what? Wait another month. Wait another 2 months. Where will that stock be? Most likely up. Wait another 3, 4, 5 months. Where will that stock be? Most likely up. Come back in a year period. Where will that stock be? Most likely up. This is a common factor, a common pattern which happens with many different stocks, many different companies out there. Their price points will dip. You will experience these dips, especially these volatile stocks. Does that mean you should sell out straight away? Absolutely not. Does that mean you should be selling on the first dip? Absolutely not. You need to learn to take time, relax, sit back and be patient. Go check my video from last week Saturday with how much I made in December, and you'll see and you'll understand exactly what I'm saying. I experienced dips throughout December. I didn't sell out. You need to know that there are going to be dips, especially when it's that first dip. That's a very common mistake, selling off on that first dip. People think, oh, a stock has dipped 3%, 4%, it's dropped in a day, and I've got to get out. I've got to cut my losses as soon as possible. That's not the definition of cutting your losses. If you see the stock is actually a falling knife, then sure, cut your losses. There's no such thing as being too late to sell. There's no such thing as losing before you sell. The only time you lose is when you sell. And eventually if you sell and you see it reverse and bounce back up and start shooting up again, you're going to be annoyed. It's going to play with your emotions. Again, it's not good for you. You do not want to be that person who does that. I know a lot of people out there have done that. You guys have commented it on my videos. So don't be that person who sells on the first dip. These stocks like to make recoveries. These stocks like to find new support levels. And what that means is oftentimes they'll bounce back. They'll shoot down here and they'll bounce back higher than they were before. So don't sell on that first dip. 4, mistaking trading with investing. People who are new to the market think that they're investing when they are trading. That is often what happens. People who have been in the market a long time know what investing is and know what the difference between investing and trading is. There are times I have made trades, videos about trades. The video I made a couple of days ago about 5 stocks to buy in 2021, that is more of an investment video. There is a complete difference. If you're new to the market and you want to invest in stocks, some of the mistakes I've just mentioned in this video are mistakes you're going to make because you are trading. If you want to invest in stocks for the long haul, you cannot be selling on the first dip. You cannot be getting excited by hype stocks and then getting disappointed when they drop in value. You cannot be doing that kind of thing. You have to understand the difference between trading and investing. If you don't, go and do your research on it. I can make a whole video and talk about that. That is a huge mistake people make. I made that mistake in the beginning as well. You guys know AMD stock? Well, that stock I sold at about, I think, $27 or almost $30 per share, and I thought I was investing. This was a beginner mistake I made, going to now, today, where it's almost at $100 per share. AMD, that was because I was trading instead of investing. If I just held that stock until today, held my shares until today, obviously my position with AMD would be a lot more than it was when I first invested. I thought I was investing, but I was pretty much trading, not realizing it. Don't be the person who sells on the first dip because you're trading instead of investing. Don't be the person who buys a hype stock which is going to only last short term when they want to invest. If you want to invest in the market, invest properly. Invest for the long haul. Invest for 1 year, 5 years, 10 years, 20 years. Think big. You want to invest, you want to get that compound interest because of your stock gains. If you want to invest, you want to buy stocks because of the compound interest and the gains you're going to get. Make sure you're investing for the long haul. Honestly, even though I said 1 year, 2 years, think even longer than that. 30 years, 40 years. If you hold that stock from $2, $3 per share until $100 per share, yes, it's definitely possible and it happens. Then you're investing. If you buy a stock for $20 and you sell it $27 the next week, you're not investing. Just so you understand the difference between those two. Again, I can make a whole video explaining that, but I want you guys to understand a very common beginner mistake is trading instead of investing. You need to understand the difference and use that to your advantage. So those are 4 different mistakes that new investors make. Hopefully you guys have learned from these mistakes. Again, I've made them before. I bounced back now, so I know better, but I'm sharing them with you guys so you guys don't make the same mistakes. As always, like I said at the beginning of the video, drop that thumbs up, comment, subscribe, and like for more. Also, there are links in the description. You guys can get free cryptocurrency. You can get free stocks. Check them out. Robinhood and Coinbase. Again, links are in the description. Added to that, make sure you guys check out all the other videos on my channel. Be back here next time for the next video. But that's it for me today. Thanks a lot for watching. I got into making. You got mistakes to be avoiding. See you guys next time for another video. Peace.
It's game